Yeah, thanks, Janice. Good evening, everyone, and thank you for joining us on this earnings call, organized to discuss the financial and operating performance of Everest Kanto Cylinder Limited for the third quarter ended December 31, 2021. We have with us today Mr. Puneet Khurana, Managing Director, and Mr. Sanjeev Kapoor, Chief Financial Officer of the company. Before we begin, I would like to state that some of the statements made in today's call may be forward-looking in nature. A detailed statement in this regard is available in the Q3 FY22 results presentation that has been sent out earlier. I now request Mr. Puneet Khurana to start the proceedings of this call.
Yeah, thanks, Shiv. Good evening, everyone. I warmly welcome you all to the Everest Kanto Cylinder earnings conference call to discuss the operating and financial performance of the quarter 31st December 2021. I would like to start with a quick introduction to the company for the benefits of those who are new to EKC. Our company is the largest manufacturer of seamless steel gas cylinders in India and has significant international presence. Our products have application in sectors such as automobile, healthcare, manufacturing, aerospace, defense, and among others. The gas economy continues to expand rapidly across the world, with the prices of crude oil rising considerably and climate change becoming mainstream to the global agenda. An increasing large number of countries are looking at developing gas ecosystem as the future of economic expansion. This includes India, that is targeting gas contribution to the country's primary energy mix to increase 11% in 2010 to 20% in 2030. The underlying infrastructure is in terms of gas pipelines and city gas distribution network is being developed rapidly. Domestic gas production also looks to expand over the next few years, creating an integrated structure for steady increase in usage till to turn the decade and expand even beyond. We see industrial demand in India grow in a secular manner, linked to the forecasted improvement in nominal GDP expansion compared to the growth of weakness in the recent period. Industrial demand has traditionally been the key consumption base to our businesses. In addition, CNG is quickly emerging as a key demand driver with continued expansion in the city gas network across the country. CNG availability is expanding far and deep. The government has also institutionalized several policies initiated to support CNG growth in the country, including One Nation, One Gas Grid, implementation of BS6 and the vehicle scrap policy. The recent round 11 of CGD auctions covering 65 additional geographies, targeting 96% of the population and 86% area coverage in the country. 430 bids were received for these 65 GAs. For the gas infrastructure, players indicated their significant interest in participating in the potential growth opportunity. The number of gas stations operating in India have already tripled in the last 6 years to March 2021, crossing the 3,000 mark. It is now expected that we will have close to 9,000 stations operational in the next 4 to 5 years, with deep presence in every part of the country. CNG vehicle adoption across passenger vehicles and commercial vehicles already visible. This trend will also accelerate over the next several years. Similarly, initiatives are also being undertaken globally, and EKC is fully geared to participate. Now to cover the Q3 performance, EKC has delivered strong operating and financial performance with the positive contribution from all geographical locations. Revenue were up at 88% to 464 crores in Q3. In India and UAE, growth has been driven by CNG adoption in auto sector, whereas US growth has been based on acceleration of industrial activities. Margins have expanded to 21% despite absorbing raw material and other cost escalations, including power and costs, logistic costs, factory expenses. Profit before tax, excluding exceptional items and forex variations, was higher by 143%. Our brownfield expansion initiatives have increased production capacity in India to about 1 million cylinders annually. The second phase of brownfield expansion is expected to complete by the second quarter of FY23. We have recently acquired 53 acres of land parcel in Mundra, Gujarat, for our planned greenfield expansion. This site is about 30 kilometers away from our Kandla facility, and its proximity is expected to drive operating efficiencies and shared cost benefits. Our balance sheet has supported the expansion capex as well as a large working capital requirement in the growing business. As a result, the ROCE has expanded 32%, and we see potential for further improvement as we continue to deliver as per plan. We now see near-term growth being driven by several factors. Firstly, we see continuous volume expansion from the increased utilization and brownfield initiatives already implemented. Secondly, higher pass-through and new contracts will improve realization. This will be followed by a second leg of brownfield expansion to be ready in 6 to 7 months from now. In FY24, we see Mundra Greenfield facility increasing revenue capacity in India and projects in Hungary also being commissioned. As I indicated, Q3 financial performances have absorbed elevated raw material prices and sharply higher cost structures. Moving ahead, we are looking for improvised realization resulting in further margin firmness as a strong demand environment. Here I would like to indicate that we are focused on growth in absolute EBITDA, even more than revenue growth. This is a matrix that we track internally, and we become well because EBITDA reflects our ability to scale up volume, increase the contribution from the value-added products, and absorb organizational costs efficiently, whereas revenues see a reflection of volume realization as well as raw material volatility. Along with the EBITDA, we are focused on improving returns on capital to create more value for stakeholders. To close, I would like to reiterate that we now see several years of growth at EKC. Visibility of gas usage continues to expand across the world. At EKC, we are poised strongly within the emerging framework and will look to leverage our established framework and expansion initiatives to drive profitability growth. On that note, I come to an end of our opening remarks and would request the moderator to open the forum for any operational and strategic-led questions that you may have. Thanks, Sam.
Thank you. Ladies and gentlemen, we will now begin the question-answer session. Anyone who wishes to ask a question may please press star then one on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking the question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Krishna Agarwal from Niveshaay. Please go ahead.
Hello.
Ma'am, your line is unmuted. You may please go ahead with your question.
Hello.
Yeah, we can hear you. Yeah.
My question is, as we're seeing that Time Technoplast is continuously focusing upon composite cylinders. So what kind of threat do we see from composite cylinders?
So, composite cylinders are specifically being used, for a specific niche market. So, we definitely, have products that are focused on gas transportation. And this is something that, the Time Technoplast products are more expensive in nature. So, there's a small little niche market for this. So, at this current moment, we don't feel that, we would like to kind of focus on these products. With the cylinders that we are making, this is where we want to stay focused on.
Okay. Also, sir, we are seeing that Maruti Suzuki and Tata Motors, they are continuously reporting good numbers in CNG variant vehicles. But as per my understanding, we are not supplying to Maruti Suzuki, right?
Sorry? We are not supplying to Suzuki. No. We don't supply to Suzuki, but we supply to all other OEMs in India.
Okay, sir. Thank you. That's it. That's from my side.
Thank you. The next question is from the line of Mohit Khurana from Banyan Capital. Please go ahead.
Yes. So my question is rather on the raw material side.
Yeah.
What exactly is the raw material mix for you And how do you think, passing on the raw material pricing to the customers is going as of now? Do you need to raise prices? Because we haven't seen that in margin.
Raw material, we are importing only one kind of raw material, that is seamless steel tubes.
Okay.
Yeah. And of course, we are always, passing on the costs ahead to the customers. We are our supplies, mainly to the OEMs or other things. There is a system, there's a formula that we follow. Our raw material plus our cost of processing plus the margin, and then we pass it on to the customer.
So is it the fixed rupee margin that you make, or is it in a percentage terms that you are allowed to?
Allowed to, it's more of a percentage.
More of a percentage, fair enough. And the seamless steel tubes that you are importing, that they basically come from China, I believe?
Yeah, they come from China. Yeah, China also, some come from Europe also. Yeah.
Okay, and what is the percentage of the raw material cost these tubes form?
Sorry, what is the?
What percentage of the total raw material cost they form?
About 85%.
Oh, fair enough. And we have seen your margins improving to around 21% in most recent quarter, EBITDA margins to be specific. How do you see these margins going ahead? Because the margins uptake has largely started from the COVID onset. Do you think this might reverse to a more normalized level going forward?
So the margins, we should be able to maintain certain margins, healthy margins.
Fair enough. Yeah, thank you. That's it from my side. I'll come back to the queue.
Thank you. The next question is from the line of Sunil Jain from Nirmal Bang. Please go ahead.
Yeah, thank you for taking my questions, sir. 2-3 questions. One, you had said that you are looking to reprice some historical contract. So this is related to India or international, and in which sector you are looking at that?
Historical contracts. In India only. Yeah. Locally, yes, in India only.
But that is in which sector, like industrial or auto sector, or across the board?
There might be a mix. Yeah, there might be a mix. Something in industrial and something in CNG.
Okay. So we had seen gross margin coming off at consolidated level in this quarter. So is it possible to bounce back to the previous quarter level of around 50%? This quarter it has come down to 45%.
I think we had always said that Q2 was a little special, but definitely margins will continue to be strong. Yeah, the margins will be strong.
We can see some improvement from Q3 level or no?
Yeah, of course.
Okay. So, and another question relating to international operation. So, whatever the revenue we had seen in the US since last 2 quarters, is that sustainable?
Yeah, that should be sustainable, yes.
Can we see some growth? How is the demand over there?
So, US has already, been hit because of the COVID. So, they are just coming back. See, the last 2 quarters have seen some, comeback. So, I think that should, we are hoping that will maintain.
So, earlier you used to say that the order book is there and now the supply.
The order book is still there. See, they have a very strong order book. But, because, see, these are all long-term contracts, all defense contracts. So sometimes because policy of government or something like this kind of event that happens, just delays the things.
Mm-hmm.
So, US always has an order book because the whole company there works only on order book. We don't have any standard products there that we manufacture. So the order book is still very healthy there. But only thing is, execution of the order book and, any event that happens like this. But now, things have, last 2 quarters, things are coming back. So we hope they should remain in the same lines.
And last question related to UAE. What is driving demand in UAE? It's a local demand or export demand, or which country is driving this demand?
So UAE is mainly an export base. There is not much sale we do in UAE at all. So mainly these kind of demand comes from, say like Africa, Egypt, South America. So mainly these are the export, and Europe of course, and they are the main countries that we export to from UAE.
So any specific country you can name, like Egypt you had said?
Yes, Egypt. The South America specific country, the South America as a whole, there's so many countries like your Brazil, Peru, Colombia, Argentina. So, they're a little bit, they export there. Europe, to Germany, Italy, to Hungary, there's so many countries, because, we have like a distributed network, so we have that the product goes to probably say to Germany, and then it gets spread all over Europe. So it's something that goes to say in Peru in South America, and then gets spread all over South America. So this is the way the business is done. But it sells to many countries there in that region.
And there again, it is demand driven by auto or industrial?
Yes, this is more like auto. So say Dubai is being driven mainly by CNG.
Okay, sir. Thank you very much for answering my question. Thank you.
Thank you. The next question is from the line of Dikshit Doshi from Whitestone Financial. Please go ahead.
Can you hear me?
Yeah, we can hear you.
Yeah, thanks for the opportunity. Actually, I'm attending this call for the first time, so some basic question I have. Firstly, in the domestic market, I assume your capacity is around 10 lakh units.
Correct.
Yeah. So, can you give the average realization per cylinder we get?
It's very, very difficult to do that, because we make wide variety of products. You make cylinders that are very small and cylinders which are very large. So it's very difficult to kind of give an average, price of the product. It's quite difficult.
Okay, but is it fair to assume that this Q3 numbers on a standalone revenue, we are running almost at a peak capacity?
Yes, we are. Yes.
Okay. Now, Okay. And now, in terms of capacity expansion, we have given one table. There you have mentioned that brownfield capex is 4 lakh cylinder, of which phase 1 is completed. So how much was the phase 1 out of 4 lakh?
So 3 lakh cylinders is already completed, and 1 lakh, so about 75% you can say is already completed, and 1 lakh cylinders is left.
Okay. And in the same slide, you have mentioned that 4 lakh cylinder capacity can annual potential revenue of 300 crore. But at the same time, 2 lakh of brownfield can give a 200 crore revenue. So is it mainly because of the product mix? Because the realization differs in both the cases.
Yes.
Okay, that's it from my side. Thanks.
Thank you.
Thank you. The next question is from the line of Deepak Podar from Sapphire Capital. Please go ahead.
Yeah, thank you very much, sir, for the opportunity. Sir, firstly, I wanted to understand some differential on the steel cylinder with the composite cylinders. Now, what I understand, the differential which earlier used to run at around 30-40% has now reduced to maybe only 10 to 15% because because of the hike in steel prices. So how do you see that? Composite being the lighter and
See, first thing, composite cylinders, I don't think they're 10 to 15% more expensive. They are much more expensive. They might be at 25-30% more expensive than steel. First thing. And composite cylinders again have a different kind of, they need a different kind of customer base, and they need a little bit more care. They're a little bit because these are a little bit, like we are manufacturing all steel cylinders. These are with plastic liners inside. I don't know if I'm able to make you understand. So these are, carbon composites with plastic liners inside. We are using all steel. So, all steel is of course a little bit more rigid to use, easier for the customers to use, much more strength. while in plastic cylinders, of course, the risk of strength and the way you use it, and there's a lot of the care that needs to be taken while using these products. It's a lot of education and a lot of care needs to be taken while using these products.
Right. But like in a nutshell, do you see that as a competition for our business or?
Not really. We feel that steel cylinders will have their, and like I told you, composite cylinders have a niche market where the customer needs, gas transportation will be a market where these kind of products will, we are continuously watching this market, so we are also keenly looking. In case we feel that the market has matured, we'll definitely be taking some kind of actions to be a part of it too,
Right. Understood. And sir, on the EBITDA margin front, you did mention that we do expect some firmness in margin going forward, maybe driven by a higher realization. So I think in the past we have given 22 to 24% kind of a EBITDA margin outlook. So is that the range that we are looking at going forward, or there has been some change because of this raw material?
Higher than that, but yeah.
Okay. And any kind of growth outlook we have for next year?
Growth outlook.
Top line.
There will be growth, because the brownfield is coming, so definitely there will be growth.
Right.
We'll be completing the brownfield, yeah.
No, so there is what I wanted to understand. Now you did say you are saying that there will be growth. Now we are at 1 million cylinder capacity and working at about 100% utilization level. Now
Correct.
The next brownfield, I think 1 lakh is expected to come by mid of this year, and the greenfield will come in 2024.
Correct.
And we are already running at 100% utilization.
Correct.
What will drive the growth then for next 6 months or maybe 2-3 quarters?
So we, the focus on value-added products, that will be the idea that we will focus more on.
Okay, but that value-added product focus might increase our growth, might be 5 to 10%, right? Not more than that, right? A meaningful growth will only come once.
Yes, so even the brownfield 100,000, yes, the growth might go to 15-20%. Yes, correct.
Oh,
yes.
I understood.
Yeah.
That's it from my side. All the very best, sir. Thank you.
Thank you so much.
Thank you. The next question is from the line of Sachin Kasera from Swan Investment. Please go.
Good afternoon, congrats for a good set of numbers. On the auto, can you give us a sense of how the market is shaping up on passenger as well as cargo? Because from what I understand, I think even the cargo market is starting to do well. So while most of the articles focus on the increasing trend of CNG in passenger side, can you give us a sense on how the cargo opportunity is shaping up?
Cargo is what do you mean, like the ACE model? Is that what you're looking at, or?
I'm talking about basically the ICVs or the LCVs or three-wheelers.
Yeah, of course. Those are, of course, they're growing very, very fast. And, that has been happening for the last 2 years now.
Mm-hmm.
So all the cargo market is growing very fast.
Can you give us some sense, like, for example, 2-3 years back, what was the auto mix between passenger and cargo, and what would be the mix now, broad sense?
Sorry, I couldn't hear you clearly. Tell me that again.
I'm saying, can you give us a sense, 2-3 years back, what was the mix of the auto CNG market between passenger and cargo, and how it is today?
Yeah, 3 years back, the CV market, was like maybe 10% of the production of the OEMs. Now you're talking about 30%, 35% of the production moving to CNG.
Sure. And how do you see this trend for the next 3 years? Is it now stabilizing 70-30?
Continue to grow.
As cargo will continue to grow faster than passenger?
Sorry?
I'm saying, how do you see this trend in the next 2-3 years? Will cargo continue to grow faster than passenger?
No, both of them will grow, equally fast. See, it all depends on the CNG infrastructure. If, government has committed a large, investment on CNG infrastructure and the way the plan looks, today we are at 3,000 stations. If we are going to 5,000, 9,000 stations, definitely infrastructure available, the vehicle population will keep on increasing.
No, that is well understood. My question was, while both will grow, will cargo grow faster than passenger if you have said for the next 2-3 years?
I think both of them will grow fast. To put a percentage means I've already told you, that you're already coming from a very low base to a very high base now. Right? So you see the trend is happening. See, there is already a change in the customer's buying behavior.
Mm-hmm.
Right? A customer that used to buy diesel vehicle has already started to, so every 10 vehicles that are selling, 3 are already CNG. So there is that mindset and the behavior of the customer to already go in for the CNG vehicle. So that change has already happened. Now only that how fast, because what is driving this growth is only infrastructure. That when a customer buys a vehicle, he sees that there is a CNG station available. Now, if that growth of CNG station is not happening as per the plan, definitely this growth will not happen because it all depends on infrastructure.
Sure. My second question was regarding the new facility we are putting up in Mundra.
Yes.
You have mentioned that you have acquired 54 acres of land that will allow for modular expansion.
Yes.
So can you give us a sense that over the next 5 to 6 years, if the demand remains strong, what is the potential capacity that we can add in Mundra? And is it that
the land is available?
We can see much faster addition.
So land is available. You keep adding, as much as you want. It all depends on how the market keeps growing. So we feel that the market is growing, but we have to go step by step. We cannot just expand without any kind of fixed goal momentum. We want to keep a very fixed way of expansion. So we are going in a very systematic manner expansion. So first we want to get over the brownfield, then we want to get into greenfield. So we want to have it in a very structured manner so we can control the expansion and get best results possible.
Sure. And next, can you share what is the net debt number as of December and how much is the debt reduction and the net debt in the first 9 months?
It's 161 on console basis, or you want it on the standalone?
Console basis.
It's 100 and how much is it? So debt is something that we have continuously worked on bringing down, and this is going to continue.
Yeah, but
it's about 150 crores on a console basis. 162, no? This is
so net debt. They're wanting net debt.
Net debt.
Yeah.
Net debt. Yeah. 137.
And what was this figure as of March 2021? How much has been reduction in the first 9 months?
Yeah, it was the same. See, what has happened is, the company had a very large hangover on the long-term debt. That if you look at my FY20 number, FY20 the number was 255 crores.
Yeah, but if we for the first 9 months, your profits have been very, very strong.
Yeah. So what's happening is the profits are being deployed into running of the company, into expansion. So we've kept a net debt at the same level, though the business is expanding, and of course there is also a further plan of reducing another 40-50 crores over the period of time. Of this also, maybe you will see that in the coming few quarters that the debts will further reduce from this level also.
Sure. And there have been talks in between and suggestions from investors to come out with a capital allocation policy over next from a medium-term perspective. Any thoughts on that? Can you share with us how do you plan to allocate the cash flows over the next 2 to 3 years? How much for debt reduction? How much for payout or buyback? How much for capex?
So the board is still considering this kind of proposal. How they want to. Right now the company is just thinking about expansion. So we would like first to complete all these expansions, and then these things will follow. Because business is growing quarter to quarter. So we need to manage all that. In a way we want to see that we can be comfortable.
And just one last question on competition. Do you see any risk that because of this, while the demand is strong, there's a lot of capacity that comes up and eventually it puts pressure on the margins in the medium term to short term?
So the only risk I see is the infrastructure. See, if the government has promised and committed a large infrastructure, then definitely all this capacity that are being planned or the capacity that we are planning, will get absorbed. Only thing is that infrastructure should continue to grow the way it's growing today. Today India is setting up at least 4 CNG stations every day. So if this kind of commitment continues by all the stakeholders, then definitely there's definitely this demand will continue.
Sure. Thank you very much and wish you all the best.
Thank you.
Thank you. A reminder to the participants, if you have a question, please press star then 1. The next question is from the line of Vivek Gautam from GS Investment. Please go ahead.
Yes, sir. I just wanted to know, we have been able for the last 1.5 years able to pass on the price increases. So what happened in this quarter, we were not able to pass on the price increase. And second thing is about any new clients added by us recently.
So there's a lot of things that have happened in this quarter. Some input costs that were suddenly put like electricity, natural gas, LPG. These kind of costs have come in. Then there has been some old contracts that needed to be honored. Those have come in. Some price lag that was there that had to be done, that came in. So there's a lot of factors that came in, and of course we are taking all corrective actions that needed to be taken for the coming quarters, coming forward, coming ahead.
And sir, any new clients added in India and outside India, abroad also?
New clients? No, not in India. I don't think we've added any new clients. Internationally, we can, I don't know, because there's, I can check that up and let you know about the international, any new clients. But India, we haven't added any new clients. No.
Okay, sir. And what about
discussion going on with lots of automobile guys who are not yet come into the CNG play? So there's lots of work under discussion with lots of people, because CNG usually takes anybody who's putting up a new vehicle, and so there has to be a lot of prototyping and making the new designs, and so there's a lot of discussion goes on. So these things take some time to kind of happen.
And sir, this is basically, is there fungibility in our product? For example, cylinders might not be required.
Yes, there is.
Cylinders and retrofitting cylinders might be required.
Yes, correct. There is fungibility. Only thing is the availability of raw material should be there.
The raw material, Maharashtra Cylinders started producing it in India, sir?
Yeah, they have started some production. So we are considering seriously to buy from them. We have done some tests and we have found them suitable.
So that will help us in reducing the inventory rate.
Yes, definitely. Buying locally will be a very good advantage.
How much can they scale up, sir?
Sorry?
Can these Maharashtra Cylinders, can they beat up the whole of the demand, or is it?
I think they have capacity. Now, only thing is, meeting the demand again will, depend on their, capacity where they are allocating, because this is a very small business for them. So maybe if they have commitments to, their oil and gas customers, we'll have to see.
And sir, any threat from the EV and the opportunity from hydrogen cylinder?
No, hydrogen is something that is, something in the future. Will definitely be there, will come. EVs, are still underway. I think there are a lot of discussion on EVs, but CNG, definitely there will be a coexistence of CNG and EVs.
And last thing is about our company basically is the leader in the segment with 50% market share and very good ratios. Except for this quarter, the margins were also excellent. But still, the price earning for us is sort of down. So mainly maybe due to the past corporate track record of our company and the Iran-US embargo, which affected us badly. So what steps are we taking to sort of increase it, sir, and the past?
The company has definitely, done a lots of, looking inside on, which strategic businesses to be in. So we sold off China. We didn't think we needed to be in China. We sold off our subsidiary in Thailand. We didn't think we needed to be. So, we have always been, over the period looking at what needs to be done and what business the company needs to be in. And, see, we have come a long way of, doing these exercises, reducing debt. I mean, the company 3-4 years back had debt of around 300 crores. So now the term loan debt is gone. So, companies have lots of things, over a period of time that have, kind of put us in this position. Now we can focus more on growth, product development, and, expansion and other things, where we should be doing. So I think we are well placed, as a company, as per the profits, as per the team, as per the, international operations. I think we are well placed, to see ourselves growing from here.
And so last thing about the opportunity side in India.
Yeah.
And what about the gas Purja pipeline, Eastern India, Northeastern India?
So that is where the great opportunity lies. More the gas pipeline, the more the opportunity goes on increasing for us every day, because the more pipeline means more CNG stations. So we'd be very happy if more and more pipelines come and network gets covered by pipeline.
Okay, sir. Keep up the good work. Thank you, sir.
Thank you so much.
Thank you. The next question is from the line of Viraj Mahadeva, an individual investor. Please go ahead.
Hi, Puneet, Sanjeev. Congratulations. I think you set a great foundation for growth in the years to come.
Thanks, Viraj.
Thank you. Industry checks tell me that demand has grown at 3 to 5x across the various subsectors, and that some CNG cylinder manufacturers are being forced to turn away or choose customers. Is this true?
Turn away? I don't understand. What do you mean? You mean they not to supply to them, or?
Yeah, you don't have enough of supply to cater to market.
I'll tell you what. The thing is that now, let's take an example of a smaller vehicle, where you require a small capacity of tank.
Yeah.
Right. And then you have a market where, simply let's put it this way, so if you have a product that sells for, say, 7,000-8,000 bucks, when I can sell a product of 16,000 rupees, and as the demand is large, and so everybody is really choosing how to, who to cater to and who not to cater to.
Perfect. You've answered my question. So you can be picky in choosing the kind of business you want.
But see, our company, we have a policy of, catering to everybody, because, this is a long-term thing that we have to see. I mean, we cannot be trying only to make, we could be looking at only the profit sectors, but, that's really not something that we want to do with such a large capacity and such a large expansion plan. And, and you have a 20-year relationship with your customers, so you want to even cater to the small guys, even though the margins are small, but, you need to, continue doing those things.
It's a balancing act. It's a balancing act.
Yes. We need to do that. We cannot, just look at, there's lots of options today. We could just choose to shy away, but, we can't do that, looking at, the customer relationship and things like that.
Understood. Puneet, in the India business, you've seen gross margins about 47% this quarter versus 50.4 and 51.5 in the last two ones that you've reported. Per my estimates, in repricing your contracts and pass-through of raw materials, where you get a 3% bump up, hopefully, in gross margins, you should be able to generate 60 to 75 crores of EBITDA on an annualized basis, or 18 to 20% higher than FY2022 of roughly 350 crores. Does that make sense, Sanjeev?
One second, let me put it.
We are trying our best to get the best contracts available with us, so that, the gross margin itself would first give us the required, EBITDA leverage. But, yes, obviously, these things make sense, and we are, working out on our contracts, and we are trying our best to get the best pricing.
Fantastic. I just want to bring out the earlier question that was asked, that even with limited revenue growth of 100K or 1 lakh cylinders coming on stream post-September, your EBITDA growth can still be well over 20% for the next year.
Yeah.
Yes.
So our focus has to be, we'll be focusing more on, the real EBITDA growth.
Fantastic. Page 28 of the presentation, you say 35 crore of capex for the Tarapur expansion. Has that 100% been incurred already? And are the phase 1 additional revenues already reflected in Q3 results, or do you have headroom in volume growth in Q4 and Q1?
No, that's incurred. No?
The expense is incurred.
Yeah, it's incurred.
It's incurred, and do you have capacity headroom to show volume growth in Q4 and Q1?
Yeah, obviously, because we are saying that we completed 75% of this increase, and obviously there is headroom for this growth. Balance, maybe we get around 100 to 125 crores further up.
Okay, perfect. The Mundra greenfield of 45 crores, does that exclude the cost of the 54 acres of land which you already bought?
Yes, it excludes. Yes.
It excludes?
Yes.
Okay. How much is oxygen cylinders as a percentage of your revenues? There's a lot of misconception about your company that you've gotten a bump up in performance last year because of COVID and oxygen supply. Can you put that to rest by saying how much is oxygen cylinders as a percent of overall revenues of the company?
See, oxygen cylinder has always been there with the company. Oxygen cylinder could be in two ways. You use medical oxygen cylinders and you use oxygen cylinders for, industrial applications.
No, I mean medical. Sorry.
Medical is not much. This quarter, I think it was hardly anything. No, last quarter there was not much. Last quarter there was
10% max.
So let me give you a revenue breakup. I think it was 70-30, right? For the total revenue breakup of CNG and industrial, it was 70-30.
No, but within the 30, Puneet, I want to know how much is medical oxygen of revenue.
Medical oxygen
10%.
I'll have to check, but could be 5-10%. I don't know. Yeah, I don't have the exact number, but could be.
Okay, helpful. And lastly, Puneet, I noticed that you all have repaid a large part of your Dubai owings from the India entity. I think
correct.
5 crores left, so that's great. But there's a promoter loan of 50 plus crores, which is obviously given in more difficult times. Can you tell us what rate is being charged on that?
That is the same rate as the bank rate.
You're not looking to refinance this.
Yeah. So what the idea was that we had made a plan where we could just simply over the next 6-8 months just take it out from our own cash flows. We don't need to kind of take a bank loan, swap it, things like that. So we were considering just taking it out on our own.
So, but what is the rate, Puneet, of this loan?
The rate is the same as the bank rate.
So it's 8%?
What is it? 9%.
Right. But, one is obviously taking the loan, two is just a good governance step, right?
Yeah. No, agreed. Definitely, this is something that we are looking at, and we definitely, see, every quarter.
Your current capital structure, I would borrow money at 50 crores at 8% from them and repay the promoter loan. It's a good governance step to take irrespective.
Yeah, we definitely, we'll consider it for sure. We'll definitely.
Thank you. All the very best.
Thank you so much, Viraj. Thank you. Thanks for your call.
Thank you.
Thank you. The next question is from the line of Bhavesh Kagal from HDFC Mutual Fund. Please go ahead.
Thanks for the comprehensive PPT given here. Bhagesh here from HDFC Mutual Fund. If you go to slide number 13.
Yeah, one. Go ahead. Yeah.
Bottom of it, you are showing the CNG install base, which I believe for 2020 is 3.5 million vehicles in India.
Correct.
And that is going up to 10 million, 1 crore. So market is almost tripling essentially. See, over about the next 8 years, how much market share will have in this? And the second issue is regarding the safety norm for you and your competitors also. In EVs, ultimately the battery maker is responsible for any fire or anything. In India, as the number rose very sharply in commercial vehicles and even in the individual vehicle, maintenance is an issue. So there will be some issues happening in terms of the safety hazard and accident. So what are the liabilities that a company like us has? Life of a vehicle is 15 years. Life of a vehicle is 15 years. So how much we give the guarantee for our cylinders?
See, usually CNG as such, has now, over 20 years in the country. Mm-hmm. So, it's not a new technology that is, being developed. So there is enough, knowledge and safety norms and things like that is already established in this product line. As per our product, we are authorized, we are supposed to be giving a life of 20 years to the product.
Okay.
As per the standard, every 20 years the cylinders need to be scrapped.
And My question regarding the market share from 3.5 million to 10.5 million, the industry in India is going.
So your market share of, you're talking about our market share?
Yes, you can see. Next 5-6 years, how do you see it?
I would like the market share to remain the same. We have 50%. I think it's a very good market share. We'd like to keep it that way. But, we are continuously looking to expand capacity, and we have, all resources available to expand capacity. So definitely, we will continue to expand capacity if the market continues to look strong. So we would like to first get over, like I said, our brownfield, then look at the first step of greenfield, and then look again, there is any further requirement, we'll definitely further again expand. So, we will definitely, and the kind of relationships that we have able to get over the last, 20 years in the customer base, gives us some kind of advantage and leverage over the competition in this product.
Yeah. But beyond that, there is no USP for a product from manufacturer A to manufacturer B, his product and your product, because he will also adhere to a safety norm, and the import also is from the same source.
Every product has a life cycle. Definitely, we have a lot of products that are still, very good. Are still giving us good results and continue to be a little bit favorable, than competitors. But definitely, every product has a life cycle. Probably when the competitors reach there, maybe we'll have to, go into some other products. So, that we continue to gain the advantage that we have.
Okay. Thanks, sir. That's all from me.
Thank you so much. Yeah.
Thank you. The next question is from the line of Prakash Prabhakar, an individual investor. Please go ahead.
Hi, good afternoon. Hi, Puneet. How are you?
Thank you.
Congratulations to all of you.
Thank
I
you.
just had two observations to make. The first one, partly another of our investor community colleagues has highlighted upon, which is the good governance of repaying the directors, the promoters' loans.
Correct.
Obviously, you have again assured, this is something that investors have been highlighting to you for some time, and I have personally also kind of raised this subject at least on 2 previous quarters, and I really hope that we see some action there.
You will. From quarter to quarter, you will see. You will definitely see the action on that. There's no reason for us to continue. There's no reason for us to continue.
In any case, 9% looks to be a little bit high for the equivalent banking interest as well, because I think the interest rates in India, fortunately, right now are quite low. So
what we are doing is what bank's rate we are getting, we are giving the promoters at the same rate. There is no advantage as such, for promoter loan in the company.
We completely believe that, and I'm sure this must be absolutely true. But just from the point of view of good governance, if you remember,
point well taken. Point well taken. Yes.
The other, mostly I try to bring in the things which are not really number driven, but rather strategy driven. The other two things which I wanted to ask you, I see a lot of emphasis on your growth from the infrastructure for gas distribution, which has been there always, So I would like to get your perspective on how do you see of course, one is the setting up of the infrastructure, the other is the availability of gas itself. Of course, the prices of gas will always continue to be better than that of diesel. But, do you see any impact on the slowing down or the acceleration of setting up this gas infrastructure, particularly because of the geopolitical scenario which is developing, And, I believe that a lot of gas in India gets imported as well. The other thing also which I wanted you to respond, and that's my next question, is that in the last quarter earning when you spoke, you had not given any kind of indication on the contraction of margin. So is this something which you were spooked by, or you were anticipating this and just missed to highlight this in the last earnings call?
I think I'll answer the other ones first. Regarding, there is, government has been quite clear on the policy of the CNG and the gas infrastructure in the country. So there seems to be no let off. All the gas companies seem to continuously investing in this sector. Very heavy investments are going here. So we don't see them, any kind of let off as per the infrastructure layout is concerned. So there should be that should continue. Obviously gas prices and gas coming from international avenues, that is always going to happen. The gas prices will increase, but like you rightly said, it is obviously going to be below the diesel prices, so always an attractive fuel for the customer.
Right. No, I appreciate that.
Yeah.
And any reason why you are not with Suzuki? Because Suzuki is the largest market share owner of the automotive sector in India, right? So is it because the cars are smaller and therefore the cylinder realization is low? Is that because of that?
No. It's just that Suzuki already has, two vendors for the same product. So there's no room for a third vendor.
Okay, considering that you are the market leader, you could not.
Yes, we were not. No, yes, we were not able to get the Suzuki business. Yes.
Okay, fine, fair enough. And one final thing, So the other part of the question you didn't answer that, last quarter when you gave an outlook on the next quarter's earnings, is it the contraction? Is it something that you just had anticipated, or is it something that unanticipated happened, spooked you kind of thing? So that's one thing. And the other thing is that it would be nice to get some indication from you whether the company would be considering dividend payouts in this year or not. So something like that.
Definitely, if the company consistently performs, then definitely board will consider this as a dividend will definitely be on their mind. And as for the margins, it's definitely, there are some, contracts and some input costs that have gone, has spooked us a little bit, and some lag in the raw material that, was not able to pass on through. So definitely these things have happened, in this quarter.
Okay. Never mind. The business is a dynamic scenario of we think that you will be able to recover from these, and
yes, of course.
Will be able to give us. We'll continue to pin our hopes on your indication that the margins will improve from here onwards, and we will soon be back to the levels of what markets have seen earlier. Thanks and best of luck.
Thank you.
Thank you. The next question is from the line of Ravi Naredi from Naredi Investment. Please go ahead.
Thank you very much to give opportunity. At different locations, at what capacity we are running in the plants?
100%. Right now, almost 100%. Both the locations.
100%. Okay, very nice. And secondly, in UAE we get 6% and US barely 2 crore profit, while our margin in India is 20%. So why we want to expand UAE and US facilities?
No, we're not expanding in UAE. We're not making any expansion in UAE and US. We're not making any expansion in those.
Okay. So old expansion, whatever capacity you are having, you are maintaining it, right?
Yes.
Because page number 3, in which time frame 0.9 million to 1.8 million capacity expansion will take place, and what will be capex requirement along with working capital?
It already announced. You can refer to the other.
I think you can go to number 13. Page number 13 or 17.
I think page number 3 I have seen where you have mentioned it will.
I think page 28
capacity will be.
Yeah, page 28 is more clearer. You can.
PKC capacity expansion plan you have mentioned 0.9 to 1.8. 6 lakh cylinder in India, 240,000 cylinder in Europe, and then you mentioned million cylinders on third number page.
Yeah, correct.
So in how many years it will be 0.9 to 1.8 million?
By
23-24.
And how much capacity capex will be there?
Capex, capex we are given.
80 and
About 250 crores.
250 crore, and we will not raise any equity, right? We will raise only internal accrual as well as debt if required, right?
70 crores.
Yeah. There is a plan to raise. No, there is a plan to raise some debt.
Okay. You are doing wonderful job. Thank you very much, sir.
Thank you, sir. Thank you.
Thank you. The next question is from the line of Pranay Javeri from J&K Holdings. Please go ahead.
Hi, sir. Thank you for this opportunity. Sir, if you can just give me a number for CapEx in this quarter.
CapEx in this quarter. Do you have any numbers?
No. So in what sense you are looking at CapEx?
So basically, on the last call, you had indicated, as well as on your September balance sheet, the net debt was about 65 crores, and you gave a number of 137 crores this quarter.
Yeah.
I'm just trying to understand that 65-70 crore number.
See, I don't know if, most of the equipment that we order is all, it's a little long drawn. I mean, the equipments take a lot of time to come. So, orders would have been placed and equipments are coming, in intervals. I don't know, does that answer your question?
No, sir. So basically, my question is, net debt as on September was about 65 crores.
Sorry.
There have been advance payments for material as well as some payments also which we made to Dubai for our outstanding.
You can understand.
Yeah. Can you hear me?
Yes, sir.
Yeah. So, I mean, there were some outflows on account of advance payments for material.
Sorry, I can't figure that out. Sorry?
Advance payment for material.
Okay.
Yeah. And what else is there?
Yeah, and some outstandings which we cleared.
Yeah, and the outstandings that were cleared, yeah.
Okay. So basically, on the last call, you had indicated that we would become a debt-free in a year's time. So would that hold still true, or would that time frame now get stretched? I'm just trying to figure this out.
Debt-free in as per the promoter's debt is concerned?
No, total debt.
Total debt, I think company will require money, to run. I mean, there'll still be some short-term debt that will come. Short-term debt will remain. Long-term debt definitely you will not see that. But short-term debt will always, be there. I mean, business is growing.
Okay.
Yeah, so we'll definitely be requiring that.
So long-term debt will be zero.
Yeah, long-term debt will be zero. Yes.
In probably a year's time.
Yeah. We'll try to do it in 6-8 months, but yeah, this is something that,
Okay. And I missed this answer of yours on your guidance for console margin. I think in last call you had basically indicated 20-24% margin.
Yes.
So you still feel that going forward FY23 we would be able to maintain the gross margin of about 45% and
sure.
EBITDA of 20-24%?
Yes. Should be, yes.
Okay, sir. Thank you so much.
Thank you.
Thank you. The next question is from the line of Nishit Shah from Equitas Investment. Please go ahead.
Good evening, sir, and thank you for this opportunity.
Yes.
Yes, sir, I would like to understand our industrial segment part. So how is the demand over there?
See, currently industrial segment demand is also very good because, economy is growing very well. So there's a good demand. And, nothing much has happened in the last 2 years. So, there's definitely, a good demand. So industry is picking up very well, yeah.
Okay. So are the realizations and margins equal to our other divisions?
That will be they probably are different, different products, different margins. It's very difficult to give you one answer.
Okay. And what would be the mix of industrial now?
I think industrial would be at 30% of the total revenue.
Okay. Sir, and this phase 1 capex, so do we have incremental potential from this compared to Q3?
Sorry? Sorry, sir, say that again.
Sir, from this phase 1 capex, do we have incremental revenue potential compared to Q3?
Yeah, we have. We already given.
Yeah, we have. We've already given that here.
Slide 28.
Yeah, check in the slide 28, it's given there.
So compared to Q3, how much more can we basically get in our revenues? Can you please share that?
You've given the total price. Actually, you've given the price.
Yeah, you could say maybe 40-50 crores every quarter.
Okay. And so my last question would be this relating to other expenditure. So Q3, our other expenditure was slightly higher. So was there any one-off?
No, there were no one-offs, no.
Yeah, no one-offs.
Some may be very small one-offs will be maybe there.
Okay. That's it, sir. Thank you.
Thank you.
Thank you. The next question is from the line of Mohit Khanna from Banyan Capital. Please go ahead.
Yes, sir. Thank you for the second opportunity here. I just wanted to understand the client concentration in terms of revenue. Can you just tell how much revenue that you get from your top 5 and top 10 clients?
Top 10 and top 5 clients. I don't think we have those numbers with us here. But
significant contribution from
business is fairly divided in a large customer base. We have a very large customer base, so the concentration is quite well, among the industrial CNG. So that even if you have the top 5 or the top 10, it's not that they will be dominating the entire business.
Okay. Probably we'll get back to you on this one again. And then you spoke about the order book in the US. Would you mind disclosing what is the size of the order book there, and if you work on orders in India, what is the size of book here?
$15 million. $35 million.
In the US and in India?
India would be, you can say 6 months, order books, you can say, like 6 months of order book.
Thank you so much.
Thank
Thank you.
you. The next question is from the line of Mukesh Bhatia from Sequin Investment. Please go ahead.
Hello.
Yes.
So congratulations on very good set of numbers.
Thank you.
I just wanted to understand a broader view that we have margins of around 20-24% right now. So do you see any other threat other than raw material prices, which also I think we pass on with some lag? Anything other than that could, hamper our margins going forward?
No, not really. Not really.
And do you see any competition that could, lead to the OEMs or the other players for you to compete at a better price?
Competition has always been there in the sector. So, I think the landscape doesn't change. It's always been the same.
Okay. Thank you, sir. That should be all.
Thank you.
Thank you. The next question is from the line of Rishikesh Oza from Robo Capital. Please go ahead.
Hi, sir. How many units did we sell in this quarter versus the last quarter?
Sorry, what?
How many units did we sell in this quarter versus last quarter?
The numbers, the quantity. We don't really disclose the numbers.
Okay. So you said you were not able to disclose the realization numbers, but I feel they are quite high right now. So do you think these level of realizations are sustainable?
Yeah. I think they should be sustainable, right? They should be sustainable.
Okay, that's great. And also, sir, I missed out on your revenue growth guidance. So did you say a 15% revenue growth for next year?
Yes.
Okay, that's great. Okay. Thank you very much.
Thank you.
Thank you. Ladies and gentlemen, that was the last question for today. I would now like to have the conference back to the management for their closing comments. Members of the management, you may please go ahead with your closing comments, sir.
Okay. Thank you once again for your interest and support. We will continue to stay engaged. Please be in touch with our investor relation team, CDR India, for any further details or discussion. Looking forward for interaction with you soon. Have a lovely evening. Thank you.